Let's also welcome on board Anshul Sehgal. He's joining us to talk to us about the fundamentals of the market from Kotak Mahindra AMC, as well as Vinay Rajani joins us to talk to us about the technicals of the market. Vinay, let me first come to you and talk to you about how the market setup is looking like. Bank Nifty has been particularly weak over the last few days, and so has been the case for the large cap names like Reliance, etc.
Yeah, exactly. So Nifty and Bank Nifty both are into consolidation phase, and Bank Nifty has got a strong support around 43,400. And if you were to talk about the Nifty, Nifty has got support around 18,200, where put writing was happening in last week. So it is a very crucial level. We are into choppy phase. Nifty is into a range of 350 points, 18,100 on the downside and the 18,450 on the upside. So it is a very difficult zone, choppy zone for the traders, and it's very difficult to decide on which side it will give a breakout. So, but obviously some oscillators have turned weak on the short-term charts, but unless we see price breakdown, we should not go bearish on the market. So as of now, the overall trend is bullish, and we are asking our clients to hold on to their long position with the stop loss of 18,100 in Nifty, and Bank Nifty we are following a stop loss of 43,400 on closing basis. So overall sector rotation is going on. There are many stocks which are making a new 52-week high and all-time high. So opportunities are there in the markets. Some small cap and mid cap stocks are still giving returns. So we are waiting for some confirmation on the downside. If that happens, then only we will turn bearish. Till then, we will trade with the strict stop losses as far as short term is concerned.
I'm just looking at the list of stocks which are at a 52-week high, and I must say it's a very long and a very impressive list. Lots of stocks across the board, names like Britannia have hit a 52-week high. You've got Bajaj Auto, which is at a life high. CG Power is at a lifetime high. Delta Corp is at a lifetime high. And I've not even gone down I'm just scanning through the alphabetical order here. Indian Hotel 52-week high, ITC 52-week high, L&T Holding 52-week. Whoa, impressive list. Anshul Sehgal joins us now. Let's connect with him. Let's understand what's next for the market. Anshul, a lot of headwinds have become tailwinds. FI flows, inflation, interest rate. For markets to go higher, it needs new triggers. What to your mind could be the triggers for the month of June, July and August now that a lot of global concerns and liquidity concerns have been sorted out?
Afternoon, Nikunj. Thanks for having me. On the markets, clearly, if there is one parameter which moves the market, it is really liquidity. And as you and I have been speaking over the last many times that we've been speaking, many investors were sitting on the sidelines holding cash in the hope that the markets will correct. And this cash, in essence, was kind of capping downsides in the market because it would come in and invest whenever there was a bout of volatility. It is in that context that we should see this rally in the markets. Liquidity, as you rightly mentioned, has become more benign than what it was earlier. FIIs have come in, also domestics have been investing, and markets have got support. To top it all, even the results that we've seen so far in this quarter, those results, both on the banking side as also non-banking side, have been quite robust. We are seeing across the board that gross margins are expanding for companies. Pressures on pricing, which companies were seeing last year, raw material pricing, those pressures are coming off. And as a result, both on margins as also on growth, companies are doing better than expected. In this environment, with liquidity backing these businesses, it looks like this rally has legs. And unless something really unprecedented happens on the global scale, we don't anticipate that this trend can change.
So where have you been shopping in this market? Incremental flows, Anshul, how are you deploying it?
One pocket where we've seen significant underperformance over the last 7-8 years is pharma. In this period, nearly since 2016, the pharma index has done nothing. It is about flat. And in the current year, we are seeing that many of the issues that these pharma companies were facing earlier, those issues are kind of getting abated. Raw material prices are coming off. Volumes are picking up. Even on pricing, the negative impact that many of these companies were seeing in the US markets, those are coming off. And as a result, stocks are reacting to these trends. We find opportunity in this space and we are looking for that opportunity. Other than that, we are finding opportunity in capital goods, certain consumer durable companies, even in defense companies, while that space has gotten re-rated in the last 1.5 years. But in the short term, there have been certain opportunities which have gotten created there. And we are kind of taking advantage of those. So across the board, we are looking for opportunities.
Okay, Anshul, stay with us. We will scout more opportunities with you, but after this very quick break, still absolutely listless. 18,255 is where we're currently at. So just beating around a very, very low band from the high to the lows of the day, or narrow band rather. We'll take a break, come right back and continue our chat with Ike.
With the technical experts, and we've got Anshul Sehgal walking us with the fundamentals of the market. I'm just looking at some stocks where the real mega move, I think, is evident, and a lot of 52-week highs. Britannia, Bajaj Auto. What amazes me, Anshul, is that I've got nobody who's come out and endorsed consumer staples as a good buy. Everyone is of the view that the best way to bet into consumption is you buy niche consumption or buy consumer discretionary. But a stock like ITC, all-time high. Stock like Britannia, nearing an all-time high. HUL, not far away from an all-time high. Why are consumer discretionary stocks doing well? Because they are supposed to be expensive by all yardsticks.
Nikunj, yes, and it's very easy to post facto analyze some of these things. But when we look at, say, an ITC, the kind of ownership that that company had till about a year ago, there was not one, or at least not many funds that were investing in this name. FIIs had lock, stock, and barrel sold this name earlier. And it was a perfect setup of a company doing well, earnings coming in strong, yet ownership being kind of weak, and valuations, of course, as a result, being favorable. A name like this used to trade at under 15 times earnings, over 5% dividend yield. Now that rebound has, of course, happened to a large extent, and now because of outperformance, many funds are jumping in and buying, and that's leading to a sort of a self-fulfilling cycle. Same with some of the other names. In a time like this, when there is so much uncertainty, and also we are in the year prior to elections, where it is a general belief that there is going to be spending by government, and as a result, rural households are going to be spending quite aggressively, which helps many of these companies. That is leading to tailwinds in these companies, and these are safe bets in the sense that in times of uncertainty, downsides are limited. So a large part of the markets are jumping in and buying, and as a result, these stocks are doing well. So as I said, post facto easy to analyze, but clearly these stocks have done quite well.
440 on ITC. What next?
Hopefully more uptrend to come for ITC. But then I think the last 1 month or 2 months, it's been more staggered for ITC. There's been a lot of pause. So there was a free run from 300 to 400 for ITC, where the participation levels increased very slowly, but from that 400 levels the participation levels intensified, but the speed of the rally has stalled somehow. I think over the last just 1 or 2 days there has been some 15-20 rupee movement for ITC, but other than that, for I think the last couple of months it's been a very slow, steady and a gradual move for ITC about this 400 mark, which means it's a good sign that the stock is trying to take its time, consolidate on every 50 rupee uptick, trying to gather as many buyers as possible, and then moving up higher and scaling past about the next level of resistances. Now I think 450 could be the next benchmark breakout for ITC.
There's one sector which is just nowhere close to its 52-week high. Kunal, which one? Large sector, not at close to a 52-week high. Take a guess.
IT.
I think insurance.
Calling it out.
Because financials are coming back. AMC stocks are nowhere close to a 52-week high. Insurance stocks are nowhere close to a 52-week high. When LIC was not going public, everyone said, oh, take it public. This is an endorsement of reform. When it went public, everyone was like, Who told you to take it public? It has only destroyed shareholder value. After Paytm, this has been the second biggest disaster in terms of an IPO market. So sometimes markets, they get confused in terms of what they really want. Anshul, the insurance story in India is very simple. Indians will need more insurance. Post-COVID, we are buying more health insurance. We are investing more in financials as an asset class. But neither AMC stocks are doing well, nor insurance stocks doing well. Why is that?
There are different reasons for both. In insurance, this was a much loved sector. There was significant over ownership in this sector till recently. And valuations had no room, no comfort on the upside. And as a result, this sector has consolidated for the better part of the last 2 years. It was in many ways it was expected, this consolidation in this sector. So also in the AMC space, you had valuations which were really running off the roof. If you looked at the leading AMC, listed AMC, that company had, that company nearly tripled from its IPO price. And in a time that the markets were quite weak, that stock was doing very well. Valuations were again ripping off the roof. Now, there were uncertainties on the anvil. Those uncertainties were with regard to the expense ratios that AMCs were charging their clients and regulatory concerns around those expense ratios. As a result, there has been a bout of consolidation in this space. And as is generally the case, people say buy on rumor, sell on news. Once the news is out, if you have, at the same box on the other side, once the news is out and that news is adverse, stocks don't react adversely because they've already built that adverse news into prices. And that is what we have seen even in AMC stocks. Stocks have not fallen despite the recent adverse news on expense ratios. That gives you an indicator, and much of the consolidation has played out in both sectors. On a stock-by-stock basis, this sector will offer opportunity going forward.
Chairman, Mr. Mohanty, the new chairman, and something specific on the exposure to Adani, and then where they think the VNB margins are moving. Both those views. Let's first hear out LIC's exposure to Adani. Sir, exactly 3 months ago, LIC ran into a bit of a hotspot because of the exposure to Adani group of companies. But are you breathing a sigh of relief that what was a concern now has become a blessing in disguise, given that the mark-to-market losses have become mark-to-market gains?
You see, if you observe my comments during that period, we told we do not go by single script, single stock. Our investment policy, everything is in place. We see the total portfolio growth in our basket, what is the fund size total investment portfolio and what is now at the end of the year. If that grows and we give decent return to all our investors, all our policyholders, I think there should not be any concern. 1 or 2 stock here and there, they may go up and go down. Whatever was there 3 months before, now you see what is the position now. So it is for the market to assess. But I can assure you, for investment, LIC's investment policy, everything is in place, and people must have total confidence.
But in the course of the fall, Mr. Mohanty, did LIC add up to their exposure, increase their exposure to Adani group of companies?
Absolutely. At that time, you see, we never either sell or buy. That was not there at that time. Whatever was there, that was a that position. But after that, we have not taken any position in that. And now you see, you yourself assess what is the value of those our investment. Everybody is now telling.
No, I appreciate that, sir, but I don't want to get this one wrong. Just to clear the air, what you are confirming to us is that in this entire volatility in Adani group of stocks, LIC was not a seller and not a buyer. You did not buy or you did not increase your exposure to Adani group of companies.
That can be verified from a stock exchange.
Okay, so that's the comment coming in from LIC on their holdings in the Adani Group. But in the meantime, let's pull up the stock of Tata Motors. That's a bit of an underperformer today. An interesting anti-consensus sell came out this morning from UPS. They are saying that all the positives seems to be priced in, but nobody is looking at the possible negatives at this point of time, and that's why they have a sell call on that counter. What's your take, Anshul, with respect to these passenger vehicle names, as well as M&M is in focus, earnings are expected, and Tata Motors and anti-consensus sell coming in there?
Anisha, rather than talk about one particular name, if I talk about the sector in general, there is a definite trend towards customers moving towards SUVs. And SUVs are higher margin products within the passenger vehicle category. And whichever company enhances the proportion of SUVs in its portfolio, that company will see margin uptake going forward. We know of one company which is going to see that benefit. In fact, it was in the news recently in your papers itself. And our belief is that that will lead to margin expansion in that company and some of the others which will benefit by this trend. The other thing is, if you look at the commercial vehicle space, there is definitely a move towards larger commercial vehicles, as also buses are coming back into vogue. This segment was kind of weak after COVID. Both these segments are positive for margins because they are higher value products. And we anticipate that this sector, as a result, will see profitability rise in the coming few years. As a result, if you add both these things up, some companies will benefit as a result, and one should be positioned accordingly.
Point taken. Just wanted to highlight what's happening with the market at this point of time. That 3 p.m. move seems to be underway. There's a big uptick as far as the Nifty is concerned. We're above the mark of 18,300 now, and that pull is actually coming from Bank Nifty. Look at that solid rally that we are witnessing. Pretty much the 3 p.m. move that we always talk about on the day of expiry. In terms of the big stocks which are doing the heavy lifting, it's Kotak Mahindra Bank, which is higher. Axis Bank is also trending higher. Having said that, HDFC Bank continues to be down almost 0.5%. Kunal, your take as far as this move is concerned, and what's the best trade, if anything at all, at this point of time?
Yeah, to go contra on the banking names, HDFC Bank would be one of the top candidates over here. The stock has confirmed, majority of the contra indicators which you look out for, oversold indicators, the stock nearing towards its 200 moving average, I think with a margin of 1% or 1.5% from its spot level. So the closer it is towards the 200 DMA, the better the risk reward is to go contra into stocks, especially when the indicators are oversold. So I think the move possibly in the next couple of days for the Bank Nifty should be powered up with the likes of HDFC Bank.
Okay, that's the take on HDFC Bank, 1608. Although right now they are seeing a mild bit of recovery come by from the session lows, as is the case on the Nifty Bank as well, just about trying to break its head above water. But Anshul, good to have you on the show as always. Glad that you could take time out. Since we were talking about autos before that, the SUV maker or other market leader M&M has now big plans for the current financial year. Though the company is not looking at any all-new model launches this year, they will launch new, refreshed and upgrades in the current financial year. Their dealers were briefed about these plans at a recently held conference as well. What else is in the pipeline? Let me take it across to Sumit and get in more details.
Mahindra and Mahindra recently had a dealership conference, and the dealer partners were given a lowdown on what all is going to happen this year. So we have got some details, including the product plans. Beginning with product plans, well, this year it's not going to be one big year when it comes to the all new products. It's going to be the year of refreshments and upgrades, including the Thar, which is going to have a 5-door version, which will be competing with many other vehicles in the category. But there will be major changes as far as updates are concerned. That's about the product, no new product, even in commercial vehicle segment, because almost all the products have been launched there. Supro is one product of Mahindra and Mahindra that is facing competition with Maruti Suzuki's Carry. So that's going to see some major upgrade with dual fuel option being given. That's part of the LCV and light commercial vehicle and MPV plans that side. About production, well, Mahindra and Mahindra has told dealers that it is going to ramp up production as soon as possible because waiting is quite high on products. But chip shortage, that is one thing that will continue to haunt company this year as well. At least 1 year it will take before the chip shortage is completely eradicated. Push on electric vehicles will continue. There will be innovative e-farm products as well and innovative other electric vehicle products as well. In the long term, Mahindra wants this segment, electric vehicle segment, to push growth. So 3 important things here: that no major product launch is happening, but refreshment upgrades will happen, so less investments will go over there. Second, ramp up of production will happen. Chip shortage though will remain a problem, and in commercial vehicle LCV segment, Supro will be given a lot of emphasis. But yes, one more thing was told, that hybrid technology, which is now the mainstay of many companies like Toyota and Maruti Suzuki, hybrid will not be touched by Mahindra and Mahindra at all. So this is the lowdown. That's an annual dealer conference in which dealers are addressed which are the important partners of the company, and this was the overall briefing given to them.
Okay, Sumit, thanks much for those details. Time to get in some closing ideas as well. Kunal, on your list?
Well, I would suggest, the trade which I would execute at current levels would be L&T Finance as a closing trade. Looks extremely attractive at 102, 102.5 levels. Would look out for 108 as an immediate target for L&T Finance.
Right. Vinay, what closing strategies would you recommend to our viewers?
Yeah, so there are many stocks which are giving good setup technically. So I would recommend REC Limited. So power stocks have been moving well today. So REC is looking good at this point of time, 132.50 around rate. You can go long, and the stop loss can be kept at 129, and on the upside we can expect a target of 136. As second pick I would like to recommend is the Tata Power, which has just crossed its 200 days moving average, and after long consolidation this stock is moving on the upside and resuming its primary uptrend. So we are bullish on Tata Power, and you can go along with a stop loss of 206. On the upside we can expect a target of 222 odd levels.
Okay, let's take a very quick break. On that note, when we come back, lots more lined up, and of course the last lap of today's trading session.